All right, traders, welcome to today's end of day recap. It is Monday, January 24th. Theme of the day. You could probably pick a couple different ways to describe today, but volatility, big moves today, just ginormous moves today. We'll go over some of those moves. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the whole risk disclaimer here. So where did we even finish for the day? So we've got the Qs finished in the green, just about up almost 0.5% for the day. Let me just zoom in here a little bit so you could see the numbers, and then I'll zoom out as I go through some other things. But let's see. So that's the Qs. SPY also finished in the green. The big move, that I saw today, or that we noticed, was just the small caps. Very, very volatile. At one point I saw these things go up, then I saw them go down, and the next thing I looked over and I saw them up like well over 1%. Talking about in a swing of about 20 minutes. The micro caps had a nice day today too. They finished up 1.7%. That's kind of been the worst of the worst if you've seen that chart recently. IWC. TLT was kind of not much of a factor today. Usually when you've got high volatility like this, TLT really gets kind of a flight to safety type move. And the most that the most the TLT was up was like, it was less than 0.5%. So we didn't really see that scream higher. Sometimes when we see that when the VIX is really cranking up like it did today. Speaking of that VIX, up about 3.6% today. I'll go through the sectors in just a minute, but I want to talk about the macro stuff, which I'm mostly going to talk about in this video. And then I think there will be plenty of chart studies to go over in the individual names, which I'm going to do a little bit later this evening. But when you have a day like this, when the VIX is heightened, right? When the VIX is over, 23, call it, right? I mean, the VIX is closed at right around 30 today, and it reached a high of it almost got to 40 today. So when you've got volatility like that, I generally stick with the indices in terms of trading vehicles, and then of course, as we're going along, I definitely try to note different areas of the market that are doing something a little bit different. One of the things that I noticed earlier on, which I'll get to, which was retail, like XRT, which is an equally weighted ETF, turned positive at one point today when the market was still down a lot. So you started to see a recovery in certain things. Bitcoin was also telling to me too that it was making a pretty decent move off the lows, which is not something that I my eyes are glued on, every day, but I generally try to look for things that are just different when everything is breaking down, like we saw today. So I'd like to always spend a little bit of time on the VIX when we have a move like this. And, that's a very toppy looking candle, I'll say, just right off the bat in the VIX. So the $1 million question is, which I know is probably on everybody's minds, is, hey, was that the end of the volatility, right? Was that the kind of capitulation that everybody was looking for? So we'll attempt to kind of look at those things. And I'll also give you my checklist of what I was talking about in the weekend macro video in terms of things that I wanted to see improve, and a little bit of a checklist. But I would say, hey, something like this where we saw the VIX go all the way up and it felt like a bit of capitulation today, certainly kind of comes up in that chart, right? Now, we still want to see this make progress and start to really kind of get ducked back under 25 and get closer to that 2018 level. But I think that this is what I generally look for on days like this, is a big whip up higher in the VIX. And then we just kind of have to monitor, because, we've seen the pattern of this happen before. And some of this volatility that we've seen, it kind of felt like it resembled what we saw a little bit in terms of March of 2020, and some other episodes of volatility. So I wanted to see really, of course, how the day was going to end, because sometimes if we had a full green bar in the VIX, then then you start to look at, oh geez, where is this VIX possibly getting to? Because again, we don't know. Like none of us. Let me break that down for you. None of us know in terms of what in terms of the volatility and how far it's going to go. We all look for signals and all look for levels and possible things where things can turn around, but there's no exact science for all this. A lot of it is, in my opinion, is just kind of watching and waiting for the right things to kind of unfold. And that's very tricky, right? And that takes a little bit of, it takes patience, it takes some, experience. And, one of the things that I said at the end of the day is, hey, if you made some mistakes this month, today, last week, learn from it and don't dwell on it. I certainly have made some mistakes this month. And listen, I'm joking around about it because it happens. You're human, right? I wish I would have done exactly everything that I talked about in the trading room perfectly. But it's, we're not perfect, right? So if you did do very well and you reduced risk where you should have, congratulations to you, right? That's really at the heart of being a risk manager and so forth. But if you didn't, you take away some of the things that where you kind of screwed up and you build off of that. And the other thing that we've been talking about recently is, hey, this is just January, right? It's different if this happens like more further in the year and you can't recover from it. You can recover from losses and so forth, right? And take lessons away from this month. So I'll move on from that. But I think just the psychological, factor of what we're doing on a day-to-day basis, it gets very wearing on you, and it could be quite stressful. And if you have to take a break, you take a break too. Because you're not used to, none of us have really seen this type of volatility or the move up to a 40 in a VIX in a while. So, as I've said, I think I said on, in one of last week's videos, sometimes you lose muscle memory. What about the VVIX, which is the volatility of the VIX itself? This needs to come in further. This is, again, it's the VVIX is the volatility of the VIX itself. So kind of the second derivative of that. And this jumped up to 170, kind of same thing, right? And we'll see if this starts to back off, in the next couple of days. What about VXN, which is the VIX for the Qs? This jumped a bit higher. This definitely took out the peak of what we saw in the beginning of December, and this kind of trailed off. So again, everything that we're going to talk about today, keep in mind, one day is not a trend, right? So we need to see follow through activity for tomorrow, right? One day is not a trend, despite kind of seeing these prices come back at the end of the day. So let's talk about some levels on the S&P. Right, we talked about the VIX. One other thing that I want to just jump into too here for a second is credit spreads. Credit spreads are important to me because they do measure when we've got something systematic, right? I talk about sometimes things like the put call ratio as like a contrarian indicator. This is not a contrarian indicator. Credit spreads, we do not want to see credit spreads widen out huge. So this did move pretty decently today, but you have to look at the overall level and you can compare it a little bit to what we saw back here. So this is not that big of a deal, I don't think. If we really start to see this spike and get up here, then that we've got some major issues on our hands, and the Fed may need to intervene when that happens in a positive way, right? In a dovish way, not in a hawkish way. But right now, they're probably looking at this, right? And they're probably saying, hey, our credit spread's blowing out. No, they didn't, right? So the credit markets are not freaking out. Right? We do not want to see that in this market, right? We don't want to use this as a contrarian signal. Equity put call ratio, things like that, we do. They're psychological, right? So, and we finally did see that. We won't get today's equity put call numbers, but I would be interested to see what they were. But, we did get a high equity put call ratio on Friday, finally. I'm not, a higher than normal. There we go, right? So this thing jumped to 182. Again, you do have to kind of look at this as 5 years, but there was some fear that finally came into the market. right? So that you can use, and that I do use as a contrarian indicator. All right, so that's what I wanted to look at some of those factors, right? Let's go over to the S&P chart. Highly unusual, the volatility that we've seen over the last week, in terms of the last couple of years, straight down. At one point, we were very close to 4,200 in the S&P. That's 200 handles away from where we closed. We did close at the 200-day moving average. So would I like to see a move above the 200-day moving average? Absolutely, right? And we did not get above there, so that's definitely something to watch. So I would say, it's nice to have this type of a day, but one day, like I said, one day is not a trend, and we're not out of the woods yet, right? We still have a very big week ahead of us in terms of things, and it's going to be interesting how this week shapes up, and what's going to come out of the meeting on Wednesday with Powell. So 200-day moving average. Notice, I sent this chart earlier, and I was like, wow, I'm really surprised that we took out this version point of control, and there was no stopping for intraday, and we actually took out another one. There's a third one that lingers down here. I thought that there was a strong possibility that was going to be taken out, but volatility is a funny thing. Sometimes you don't have to take out those levels. 1 hour chart, a level to watch for tomorrow, right? We talked about these being taken out too. 44.56, right? So if you're looking for that continuation, right, I would really like to see the S&P get inside value for the week. Look at the trend, by the way, right? And again, I'm on the 1 hour bar here, but notice that so this is a nice bounce from the lows, but we've got much more work to do to reverse this short-term downtrend. We just got really extended to the downside, but the trend is still down in the short term. Right? It just got way stretched. Let's go over to Nasdaq, and we'll start with that daily chart too. Daily chart, again, a lot of these, downside version point of controls taken out. 2 of them, one here, one here. Again, version point of control is an area where there is a high amount of volume that we have not seen price return to. Right? It often is similar to like a gap. Right? Technicians always talk about gaps in their charts, right? And whether or not this gap is filled or unfilled. So it's kind of like coming back and filling an area where there was a huge amount of volume before. And these things are really, they're very interesting pivot points. I've used them a lot the last few years. But when there's heavy volume, and by the way, take a look at the volume on today's bar. Like, this is Nasdaq futures, but you could look at the Qs, which you're also going to see a VPOC 2 VPOCs being taken out last couple of days. Again, there's another one down here, I believe I saw, oh, maybe not, further down, but look at the volume, right? So that also kind of, to me, indicates, I won't say capitulation, I'll say possible capitulation, because as I've said now about 5 times in this video, one day is not a trend, right? So big move here. And what we want to see tomorrow, and on Fed day as well, a continuation to the upside. All right, IWM, last one to look at. Also, there is a VPOC takeout here too. Again, a logical place for this to bounce. Now, again, this trend is really tough for IWM, so I'm not sure that I would say, this could rebound and maybe it comes back and checks back into the breakdown point. But I don't know. I think it's a tough chart. Right, but certainly if you wanted to try along, you could use this 194.65 level. Right, I didn't go over these 1 hour. I think I skipped the 1 hour charts. Interesting, this got into value. So 20, you could also use 201.08, which is the bottom of value for the week. Right, so this value area again is based on last week's volume profile. Important in the short run. All right, Qs, you're still gonna. I'll give you Q. I know people like to look at the Qs versus Nasdaq futures. 360.50 is going to be some resistance to the upside. A lot of these taken out, very close, just bang, bang, bang. These things taken out this morning. All right. So we talked about the major indices. XRT, might as well bring up that chart because I thought that was interesting. I mean, it had a 6% day in the retail ETF. Part of this, I think, was this deal that happened with Dillard's, or I'm sorry, not Dillard's. I'm getting my names wrong. Kohl's, I was looking at Dillard's earlier. But if you look at this ETF in the movers, I think Cole's had something to do with some of these names. And just also keep in mind, this has been a very weak area. If you look at this chart before today, well, even with today, this was also a breakdown similar to IWM, a little bit different shape going on, but also there's high short interest with a lot of these names. So, there's probably at this point some short covering in Carvana. I mean, this stock has really gotten beaten up. VPOC takeout, right? There was a bullish note out by a broker saying that kind of enough is enough with this thing to the downside. So, that may have ignited that move a bit in some short covering today, but you got to believe that part of this move today in some of these retailers is short covering rather than outright longs. Nevertheless, you have to start somewhere, right? And we really haven't seen, a close, like this in a while in some of these areas of the market. All right. I'll share my trade blotter for the day and what I did. I mean, as I said earlier in the video, hey, I have some mistakes in here. Like I finally took a stop that, I went through the stop price a little bit in LYV. I took this so close to the low of the day. It happens, right? Sometimes that really happens. Dominion, which I thought was a really good setup today. I took this stop before I even got it today, but I mean, these things are just not acting like they normally do, right? And if you're in something that is not acting the way that you think it is, or the way that it traditionally does, I just get out of it. It's not the intent of what I was looking for, which was a break higher, right, in a utility, and kind of, so it did come back. At one point it was all the way down to 76, right? But there's nothing wrong, in my opinion, with going, having that high cash balance and waiting for things that you really like to see. I traded a lot of TQQQ today. I got a question about this over the weekend because I was trading some Qs puts on Fridays. They said, why did you pick that? It's just, they're not all the same, but sometimes I like the fact that the options, you can only lose the premium, right? And something like TQQ or the other one, I think it's SQQQ, you do have to make sure that you're really monitoring, and making sure that you're using stop prices. So it's a little bit of a difference of use. I really only use the triple leveraged for day trades. Something that if the volatility stays around 30, you'll see me continue to do, because you could make a lot of money with these things if you get a big move and if you're on the right side of the market, of course. But it's a function of the volatility, and it's so much harder to trade options when the VIX is at a 20 versus a 30. So that's also why I did not trade like the Qs calls today. Just too difficult, right? I think I tried doing something with options. Yeah, I traded some XBI today, and I just didn't feel comfortable being in them for very long, because if you do start to see the VIX come down, the premium that'll come out of the premium pretty quickly. It's called vol crush, right? Yeah, so I got out of that at 210 today. I made some money, happy with it. Base hit kind of stuff, maybe a double on the last portion, maybe, and just moving along. I did put on a call spread too, once the market kind of pulled back a little bit right? We saw this today, which was a curious point today, right around this like 2 o'clock hour, 2 o'clock till about 2:40. I added a little bit of some SPX exposure onto the long side on that little bit of a pullback, hoping again, none of us know this, right? But hoping that this was going to hold in here, which it did. I added some Accenture. I saw some Accenture calls on the tape. I don't know if that was because of IBM reporting, but I like this company. Right? It had monster earnings, and to me, like, this is something that, down to the 200-day moving average. Here's a Virgin point of control taken out. This is not an easy stock to trade because it's $339. The options are a bit difficult, but I just thought there's, first of all, there's a lot of charts that look like this, but I view this as really a quality company. So that's why I took a shot at Accenture. We also saw some Estee Lauder go up. You know, again, I do not trade like big option size when we've got the VIX, but again, waterfall down. You know, this name's going to report earnings soon, but I think kind of like this is the enough is enough type call buy, with several VPOCs being taken out. Right? And I actually bought stock for this one. So I bought some options in EL for this one. And then again, went back to the Qs at the end of the day, TQQQ, and then got out of that with a few minutes to go. All right, guys. So that's it. I mentioned in the beginning of the video that I would talk about what I was looking for in terms of, you know, on Sunday. I said, here's what I'm looking for kind of a, you know, a move back to the upside, to price to stabilize, right? We saw that, of course, today, but very volatile, and to retake the short-term moving averages. We're not there yet in terms of retaking the short-term moving averages, just because we sank so far. Even the long-term moving average too, the 200-day moving average, I'm definitely watching that. Breadth to improve. It did, from where it was. I mean, it was a nasty, nasty level today. If we look at the, hopefully you can see this on the 5-minute. I mean, breadth was some of the worst breadth that I've seen in a while. And here, like on the NYSE side, I think we hit like -16 on our indicator, but it did improve. But we need more evidence to see if, you know, we're going to see strong improvement after that. And then earnings, you know, we're going to need to see some good results, and not just good results, but more importantly, good price reaction. IBM is, you know, is not always one of the ones that I really watch on earnings season. You know, I would be, you know, watching for obviously when Microsoft reports and Apple, right? I'm more interested in those, and to see what the price action is going to be after those names. Even something like a ServiceNow, I'm interested as well. IBM, nice to see this move, but I don't think IBM is truly, you know, the name that drives tech these days. All right, guys. So that is it for today's video. I think that's enough, and enough of one day for the volatility. And let's get back at it tomorrow, and we'll definitely be going over some more single names through some chart studies tonight, chart scanning tonight. Have a great night, everybody.